Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Friday afternoon, we have Mark Marex, Senior Index Specialist with Index Research and Development at Nasdaq Investment Intelligence, to discuss Nasdaq-100 performance versus the ARK fund. Mark, it's great to see you as always. Welcome back to Trade Talks. And clearly, this is a very hot topic for traders and investors. So let's start off here. Give us some background on the ARK fund and some details into its performance.
Yeah, sure, Jill. So let's start off just looking at this first slide, which has year-to-date performance in 2022 and full-year performance in 2021. Of course, it's been a pretty challenging market environment for most countries, most indexes, most sectors year to date. So you can see the Nasdaq-100 on a total return basis through yesterday's close down just over 13% year to date. But that is quite a bit less than what ARKK, the ARK Innovation Fund, has produced this year so far, down about 28%. You look at what happened last year, we outperformed ARKK by over 50 percentage points, up 27.5% versus down 24% for ARKK. This may be a bit of a surprise to some folks who know that ARK has been having challenges after peaking in early February of last year, but maybe not realizing that the outperformance of the NDX has been that tremendous with respect to this product, given all the recent headlines about the real correction that has happened here with the Nasdaq-100, but really quite minimal when put in the context of what's happening with ARK.
And of course, this is a really interesting chart too, Mark. If we take a look at ARK performance since inception versus Nasdaq-100.
Yeah, so ARK was launched at the end of October 2014. Those are the returns I'm showing here on a total return basis. And part of the reason I'm recording this segment now is because we actually have overtaken ARKK in terms of total returns since that fund was launched. As of yesterday's close, up 263% for the Nasdaq-100 versus only about 222% for ARK. You can see it's really cooled off since that peak early last year, where it was up about 670% since inception, giving back, about 2/3 of that outperformance just in the last year.
And if we take a look at the last slide here, which I think is really interesting, we can see flows and investor profits.
Yeah, so this is my attempt at kind of replicating some interesting analysis I've seen online about money-weighted returns, right? And so what we've been talking about so far is time-weighted returns of the two products over specific time periods, right? But that doesn't take into account the timing of when investors have put money into ARK versus the QQQ, which is the biggest tracking product for the Nasdaq-100. So what I've shown here is, since again the ARKK inception, the blue lines on the left and right sides of the charts, QQQ versus ARKK, those show the point in time AUM as of each year end, going through even yesterday's close. So you can see QQQ sitting at about 181.5 billion in AUM, ARKK down to about 11.6 billion. And then the bars that you see on that different axis there, the dark gray, those are flows, right? Those are the funds that came in over the course of the year, new purchases of fund shares. You can see a huge spike up in ARK in 2020, and still a pretty big spike in 2021. But what else do you see, right? You see the green bars really reversing, and after generating a P&L gain of over 6 billion in 2020 for investors, basically gave all of that back. ARKK did in 2021. This year, it's given back an incremental 5 billion. So when you look at the history of this product, and part of the reason that I'm also recording this now is Cathie Wood gave a pretty long interview last week on CNBC, and one of the things she said there, I thought she said a lot of things that were dubious, but one of the things she said, talking about the Nasdaq-100, was that it was no longer a true innovation index, and citing the existence of a couple companies like Kraft, Pepsi, who over time have, decided to switch listing exchanges from the New York Stock Exchange to the Nasdaq. Certainly not making it not an innovation index, in my opinion, We cover a lot on here in terms of the number of patents that Nasdaq-100 companies produce, the number of themes that companies like Apple, like Google, Tesla, and Amazon are involved in. We brought up the fact, for example, that Google has the single largest portfolio of AI patents in the world, that NVIDIA has one of the fastest supercomputers in the world, faster than many countries, many universities. Regeneron has one of the largest genetic sequencing efforts in the world. These are all points to me that just frankly aren't fair, I think, to be ignored when talking about a broad-based index like the Nasdaq-100. As ARK tries to, I think, spin what's been happening with their performance recently, I think you should put it all in context, right? Not just the fact that recent performance has been bad, but because of all the hype around their strategy, getting investors to come in, running up to the peak of returns there, and then losing more money that they've made for investors before that run up. It's really incredible, the divergence here. I think over this time period, the Qs have made a net $98 billion for investors since the launch of ARKK. ARKK has lost a net $4.5 billion. So yeah, pretty dramatic difference.
That's some really great work that you had done there, Mark. And it's interesting when you look at that performance, you have to remember too that this is an actively managed fund, right? So there are people who are picking and choosing and doing stock selection here, and to see that divergence in performance is a bit striking. You can draw your own conclusions from there, but very good work on your part. Thank you for joining us, Mark, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.